What's up, everyone? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvidia, the QQQ, and a couple of other tickers. And break down what's happening with the overall market moving forward, what factors are affecting the market, so what you should be watching for as time progresses. Let me just mention that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. Anyways, the market was attempting to make a rebound in this bear flag like setup that was developing, and we ended up getting a big rejection instead, which shows that the overall trend is more and more bearish. So we're going to be watching to see what the market's about to do, and we're going to be looking for a very, very important amount of volatility going into tomorrow, which will help us determine if the market is going to continue to see the next leg down, or if we're about to get a bounce. So I'll give you guys more information about this over the next couple of minutes and talk about levels and such. But let me first go over some data. The first thing that's a little bit concerning, not only for the markets, but the global space, would be what's happening in the Middle East. The attacks are continuing, and there's threats of even more of them. So it's very, very intense right now. It's very, very sad for innocent lives. And this is not the best of news. With some attacks that have been happening, the market's seeing a little bit more of a negative reaction. And there's other factors also leading to that when we're looking at what's happening with the yen, which is once again increasing in value. But all of this is just more negative. All I could do is hope for peace and hope for the best. But like I said before, this is not the best of news. There's more news coming out for tomorrow. Tomorrow is going to be Thursday, August 8th, 2024. 1 hour before the market opens, we have initial jobless claims coming out. We're expecting it to be between 240 and 247,000. If this is above expectations, this could be a little more negative for the markets. And then we'll be watching continuing jobless claims and then other pieces of data. Then we have some bill auctions coming out at 11:30 a.m. Eastern Standard Time, which is typically not too crazy. Then Barkin from the Fed is going to be giving a speech. That's pretty much it for data, though. There's not really much else coming out for the remainder of the week after initial jobless claims and continuing jobless claims all coming out. Besides that, right now the market sees a 71.5% chance the Fed gives us 50 basis points worth of cuts for the September meeting, and now it's at 28.5% for a 25 basis point cut. The market's expecting a cut. This will depend on data according to the Fed, and the Fed has not confirmed any emergency cuts, which is a little bit more negative for the markets. More Fed presidents and officials are continuing to say that the Fed is not going to be giving us emergency cuts. There's nothing like that coming. So that's what's causing the market to be a little bit more negative as well. Now, there's also news coming out involving earnings. We just had Robinhood announce earnings. Tomorrow, we have a few more like Plug, not to mention SoundHound. But for today, we had Shopify and Walt Disney. I already went over these in the morning, but I'm just going to be very brief at Disney. Just so you guys know, things are kind of mixed for them, but a little bit more good than bad. But it wasn't really enough to wow investors. EPS was a beat at $1.39 adjusted, above expectations. Revenue is at $23.16 billion above expectations, with operating income increasing 19%. Not bad whatsoever. However, what wasn't too good was the fact that they did announce further streaming price hikes on Tuesday. A little bit more negative for the share price. Not to mention this right over here, theme parks have a bit of a slowdown, especially in the US. They're down about 6% in terms of operating income. And then I also want to mention that they may have to use more money to be spent on them than before, so expenses might be going up, and they're pledging to spend roughly $60 billion in the theme parks over the next decade. So a little bit mixed, but more good than bad came out from this, especially with decent guidance. We'll see how things go, but the share price was still down because it wasn't really enough to wow those investors. Right now, extreme fear is making up sentiment, and that is still driving the market down. The market momentum is still at extreme fear because we're losing the 125 daily moving average. That's a sign that there is more downside possibly coming. And then the puts and call option ratio is going up as we're seeing shorts entering the market like crazy. And we're getting very, very close to where peak fear tends to be around that one area, 1 to 1.1. So we're getting closer. This does suggest that there might still be more downside coming. We might still see this spike more. So it's not quite done yet, but that's once again giving us more information about how the options chain is affecting us. Volatility is extremely fearful. The VIX is still on a breakout, and we'll see how that ends up being affected. So in my personal opinion, regarding the VIX, I want to be watching for something very interesting. You generally want to see some divergences forming. So that's going to help us mark when the market's going to bottom. Notice how the VIX pumped like crazy. Now it came down, it's making a lower high. I want to see if the VIX does push to fill this gap again. And if it does get a little push, does the VIX establish a lower high while the market makes a lower low, basically? If we get a divergence like that, if SPY, the S&P 500 make a new low and the VIX does not break its high, that could be a sign the market's about to bottom on this next leg. So we'll see. That's just one thing that's worth mentioning for a way to determine if we're about to bottom. Anyways, going back, what do I see on the charts now? I'm just going to focus on that. When I go back to the 4-hour time frame on SPY, look at the trend, guys. This is quite bearish. In fact, this resembles an Elliott wave structure. We had wave 1 here, wave 2, wave 3, wave 4, and then wave 5 is still coming. That would suggest that there is one more leg coming to the downside. So this looks bearish. The 4-hour is bearish. We have a big downtrend. We were trying to bounce. We tried to rebound today. And what happened was we hit our 20 EMA. See the green line down here? We hit that and we failed to break it. We did attempt to break it only to get a big rejection, and then we got smacked back down off this flag. So that suggests that there's likely more downside coming. Now, whether or not we actually get more downside depends on the levels, as I typically say. So we'll be watching some very, very key levels to determine if we're about to see a bigger rug pull in the markets or not. So what are those levels, you may ask? Let me go over all of them. So hypothetically speaking, okay, if you want to turn bullish, SPY needs to break back above 525. If we do that tomorrow, we're going to turn bullish. That looks unlikely looking at the chart. Now, if we want to rebound at least a little bit, you want to see SPY reclaim 518. If we hold above that, we could try to make our way back up to 520, at least into the 520s if we do reclaim 518. So to turn back up just a bit, you want to reclaim 518. To turn bullish, you want to reclaim 525. But if we're bearish, if we turn bearish, we have to basically fail to hold 518. I think that if we fail to reclaim this low right here, if we fail to reclaim the 518 area, there's a good chance this is going to continue to fall all the way down to about, not just 515, but all the way down to 510. And then for our key support, I'm going to show you the truth on the daily time frame. When you look at it like this, SPY is dipping pretty hard. We have a bearish looking daily candlestick, which typically suggests there's more downside coming, especially because of what's happening in the Middle East and interest rates and the fear that's building up about the Fed. So we have this key support at 506 on the daily time frame. We might bottom very close to that. If we end up losing 515, I think that's where we might be headed towards, and we may bottom very close to that. It is possible we go a little bit lower, but I do think we might eventually try to reclaim this, and then once we reclaim this, that's when the bottom is going to be coming. So I still think that there is a risk of more downside looking at the chart. So once again, if we break 525, we're bullish. If we just get back to 518, we could make an attempt to rebound. And if we fail to hold 518, watch basically this 515 area. If that fails, we're going down to 510, if not 506, if that breaks. What do I think SPY is going to do? Honestly, guys, the trend is bearish. We look bearish. We're getting a big rejection right here. We're struggling. We attempted to rebound only to reject. And it's very similar to what we saw before. We had this pattern where we rebounded and rejected, rebounded and rejected. We attempted to rebound only to reject. So I think the odds favor the downside. The odds are greatly favoring that SPY is going to attempt to rebound in the morning, then start dipping, and it's going to fail and make its way all the way back down to 510, if not 506. I favor that in my personal opinion. This will depend on initial jobless claims and these other factors. But the chart suggests downside is looking more favorable, so I do make that my prediction. Once again, guys, I'm not a fortune teller. I'm not going to get every prediction right, but that's looking more favorable just looking at the chart. So I think that's most likely what's going to happen. But watch the levels just to be safe. On ES, it's very simple. If we reclaim 5290, we're going to be looking for a rebound. If not, I'll be looking at resistance around 50 to 40. If we could reclaim that, then there might be a small rebound. To turn bullish, you want to break past at least 5300. And if we turn bearish, you want to see this thing basically lose 5200, and we'll be dipping all the way down, I would say, to the low 5100s, if not below that, all the way down to like the 5000s. What looks more favorable? The answer is we might rebound a little bit and then continue to sink, especially if there are more attacks that happen in the Middle East. And the odds are favoring us basically going down to the 5100s, in my personal opinion. For SPX, we look bearish. Why do we look bearish? Because look at the trend. We rebounded and rejected, rebounded and rejected, rebounded and rejected 3 times in a row. To be bullish, you want to see this break past at least 5300. If we continue to fall, excuse me, guys, I apologize. We have this gap to fill down here, and if we continue to fall, we're going to likely be dipping all the way down to the 5100s. And if that fails us, I think we're coming all the way down to 5120 and eventually the very, very low 5100s. So this looks like it's going to reject, and I think that it's going to be dipping lower. This favors the downside, so that's still looking very imminent. For Nvidia, we rebounded only to form a double top, and we failed to break past the 110 area to turn bullish. To be at least turn back up, you want to get back above 104. We have support at 97.5, and we have resistance around 100. My gut tells me it's going to rebound a bit in the morning, then start dipping lower. We need to reclaim 103.5 to turn back up. Otherwise, we favor the downside. Looking at the double top that's forming, this looks like a giant double top rejection. And this imbalance over here is going to act as a magnet. So I think what's going to happen is Nvidia kind of pushes a little bit in the morning, then drops all the way down to 93. That's the most likely possibility looking at the chart from a technical standpoint. So 93 looks like it's coming for Nvidia, if not lower, into like the 85 area if that fails. So watch for that very carefully. For Bitcoin, we have 55,951 as resistance. If this breaks, we're going back up towards 57,000. If this rejects, I'll be looking for a test of 54,600. If that fails, this 54,500 to 54,600 area, if that fails, I think we're easily coming all the way down towards the 53,000 zone. So the 53s are coming on Bitcoin if we continue to dip, and this is looking very bearish right now. Looks like we got a rejection off this lower high. And when you zoom out of Bitcoin, very similar to SPY, we're just continuing to reject, rebound, reject, rebound, reject, rebound bigger, and then just reject. So it still looks bearish, and I favor the downside. For other tickers out there, let's just double check this. We have Tesla. We're gonna go back to Tesla. Tesla needs to reclaim 200 to turn back up. We have resistance at 195. If we get back up to 195, there could be an attempt to push, and breaking 200 would turn us bullish. If we fail at 190, we're easily going down to 187.8, if not the 182 area. In my opinion, I think that this is forming a double top, and we look more bearish, and I favor we're going to be dipping all the way down towards 185, if not 182. So, excuse me, Tesla looks more bearish. I think that this chart is favoring a move down to the lower 180s, and we're rejecting so far. I will change my mind if we reclaim 200.5, but this chart is favoring downside right now. NQ had a bearish divergence that formed, got a big rejection, looks more bearish. We got to reclaim 18,260 to turn back up. If we continue to fall, this imbalance will take us all the way down to about 17,500 again. And this does look very, very possible. It looks like we had a nice triple top rejection, and this might take us all the way down towards 17,500. That's looking a lot more favorable to me. For the QQQ, it's the same thing. Essentially, we had a bearish divergence. If we were to hypothetically reclaim 442, we would rebound. If not, I think that there's a risk of 430 being tested. If not, 424. So I think the chart is favoring the downside. I think we're going to most likely see some more downside from here. We need to reclaim 442 to turn back up, but this is favoring that we kind of push a bit and start tipping lower all the way down to about 424. Maybe something's going to happen in the Middle East. Maybe we're going to get some bad news. The chart looks a little bit more bearish to me. Apple is just very tight right now. If we can reclaim 210, it does have some potential to push. And if we end up losing 205, there's going to be a big rug pull coming. As of right now, all it's doing is it's kind of pushing and dropping, pushing and dropping, pushing and dropping back and forth and back and forth, not really picking a clear direction. We're kind of just stuck in the middle. So I presume the most likely possibility is we're going to be looking for a little bit of downside. I think that we might see Apple come down to fill this gap towards 205, but then it might just get bought back up and just continue to shuffle. But I do see a little bit of a dip coming and not really a whole lot else after that. For Palantir, we have a double top leg structure that's developing. Unfortunately, only pops to reject. It's not looking too good. We also closed below our key EMAs, but there's no confirmation of a break below our key support at 26. But I just want to say there is a risk of that happening. If we reclaim 26.6, we could be looking for a rebound to 28. And if we end up losing 26 flat, I think we're easily coming down towards 24. I think Palantir is going to be tipping towards 24.1. That looks more favorable to me in my personal opinion. For Supermicro, like I said in my video yesterday, expect a bloodbath. Okay, earnings were not good. They missed on their EPS, and things are not looking too good in my personal opinion. So I just want to make it very clear that with the downside that is developing, um, I would be very, very mindful of the fact that there's no sign that this is done yet. We do have kind of like a wedge form, but I'm not really going to count on that. There's this big liquidity grab, which led to this big sell off. So when you go to the 4 hour time frame, I think that this is looking more bearish still. There's no sign of this truly bouncing. And when you zoom out like this, you guys can see there's, it's just a complete bloodbath. So I think if we could reclaim 500, it is possible we try to rebound. But this chart is suggesting we're going to continue to fall all the way down towards 450. I think Supermicro still remains bearish after some bad earnings. The 10 for 1 stock split's not going to help it, by the way. It still looks bearish. Lo and behold, I mentioned that downside is likely coming for Rivian, and that is what happened so far, especially after earnings. So if you want to turn back up, we got to reclaim 15.38. Otherwise, this chart is favoring the low 13s. I think this is favoring the low 13s. When you look at the hourly time frame, it's continuing to reject. It's struggling to break past its key EMAs, struggling to get back into the 15s. This is favoring a move back down towards 13. For SoFi, we have a nice double top rejection. If we were to reclaim 6.46, I'd be looking for 6.57. If we end up losing support around 6.3, we'd be dipping all the way down towards 6. This chart's favoring 6, in my opinion, so I favor more downside on SoFi. For the IWM Russell 2000, if we reclaim 206, we could try to bounce. We failed to do so, so now we're favoring the downside. So I think the odds greatly favor 198. So we're looking more bearish on the IWM, the Russell 2000. For AMD, AMD is rejecting and rebounded only to reject. If we were to reclaim 133, we could try to bounce. Otherwise, it's favoring downside. I presume what's going to happen is this imbalance will fill, and I think 123 is coming. We lost structure right over here. We lost support. So I'm thinking we're going to be dipping down to 123. For ARM, ARM is looking a little bit more bearish off this divergence. We got to reclaim 112 to turn back up. Otherwise, the chart is favoring a move all the way down to 98. I think we're going to most likely see that. Watch 100 as one support. If that fails us, 98 is coming. And I think this chart is favoring the downside. For Coinbase, look at 180 as resistance. If we break through that, I'd be looking for 186. If we end up losing support down towards 177, we could be dipping all the way down here towards that 168 area. Coinbase also has a double top, which is a confluence for the downside move that we're seeing so far. So it suggests that downside is still looking imminent. For Amazon, we're kind of rejecting, not looking as bad as many stocks out there. I just want to say this. I'm basically going to be watching our 50 EMA. 165, if we reclaim that, we turn back to bullish. And then we have support at 160. I think we're going to be testing 160 tomorrow. If that fails, 158 is coming, if not lower levels, such as 154. And if we hold 160, we could try to balance, but I think there's going to be a little dip coming that could develop into a bigger dip if we lose key support. For Meta, we have a double top leg structure. I think that with this bearish divergence, we basically have this 484 area as our support. If that fails, if we lose 484 on Meta, I think we're easily coming down towards 475. That's going to be my next target. If we reclaim 492, this could try to bounce, but this chart is suggesting downside. So make sure you watch that key support on Meta. If we don't hold our very, very key 200 EMA, there's going to be a dip coming all the way down towards 478 and 475. The chart is looking more bearish. For Microsoft, we have a big rejection right over here. I'll be looking at 400 as resistance. If we reclaim 402, we turn back up. And if we end up losing support over here around 395, I think we're easily going to be tipping down towards 388. So I think that this is looking a little bit more bearish and we are favoring the downside. So that is looking more favorable to me. For Google, Google needs to reclaim 162.76 to turn back up. And if we if we fail, look at 158 as support, 160 and 158. My gut tells me that this is going to likely be dipping back down to 158 or lower, so it still looks more bearish. GameStop looks a little bit more bearish. Got to reclaim 21 to turn back up. Otherwise, we're going to be dipping all the way down to about 20. The chart favors downside. AMC is favoring downside. A move back down to about 4.6. Got to get back to above at least 4.97 to turn back up. Otherwise, it looks bearish to me. DJT came down like we predicted yesterday. Might be dipping back down to 25 flat, and we'll see if we bounce off that or not. The VIX will help us understand if the market's about to bottom or not. As of right now, it looks like it's a little more bullish. We're above our key EMAs. If we hold above 27.5, we could push to fill this gap again towards 37. So I'll be watching that gap on the VIX. Will we push to fill that? Is the market about to get a rug pull? We have to be careful. 10 years going up because the Fed is likely not going to be as dovish as the market was predicting. That's why there's a big shift. And then last but not least, we have the dollar. The dollar is climbing, which is a little bit bearish for the markets. We're forming a nice flag. This could be like a cup and handle, and it's possibly try to push higher. We're getting very tight on the dollar. So if we get a break to the upside, this could cause the market to dip. So watch for that very carefully. Anyways, guys, that is pretty much it for my video. The market is still looking bearish. We're still favoring the downside amidst this high volatility. So all I can tell you guys is just to be very, very careful, be very mindful of this crazy volatility we're seeing, and just know the market is very, very manipulated. With that being said, watch your levels just for confirmation, but just know the charts are suggesting that downside is more probable. And with that being said, I will see you guys tomorrow before the market opens. Don't forget, we have initial jobless claims tomorrow, so we'll see how the things end up looking. And I can't wait to see what ends up developing on these charts. See you guys tomorrow. Have a great day, night, or evening, wherever you are. And peace out.